Hey everyone. Uh, My name is Lindsay Clark. I'm the Chief Borrower Advocate here at Savi, and we power the Student Debt Navigator that provides support to NEA members with student loan debt. So excited to be here, and I will pass it off to Scott Kish.
Hi, good evening, everyone. My name is Scott Kish. I'm with NEA Member Benefits, and we work to create programs like the Student Debt Navigator to help members uh, basically make their lives better. So hopefully, folks are using the tool to help navigate what can be a pretty confusing landscape and use it to, again, find a solution to get their loans forgiven or at least get on the path to forgiveness. So I think that's it, right? So we'll kick it back to Ronnie.
Yep, thanks, Scott. And so folks here tonight will hear from us at various times, or we may be popping in and answering your questions as we go in through this webinar. A few housekeeping items that I want to cover at the very beginning. This webinar is being recorded, and so if you do need to hop off or miss anything at any point and want to go back to it, we will send a link to the recording afterwards for you to take a view. That will also include a copy of the slides in PDF format. Additionally, we do ask that if you do have any questions, try to hold them to the end because some of the content in the webinar may pop up towards the end because we do have an FAQ section and we do have time for audience questions at the very end. But if you do have a question, we ask that you use the Q&A function in Zoom opposed to using the chat. That will be the best way for us to log it. And if we don't get to your questions in time during this webinar, we will do our best to also answer it after the fact and follow up with you via email. Finally, we do ask that if you do ask any questions, refrain from sharing any too personal information. We want to make sure that folks in the audience can be able to see or hear questions that may be pertaining to all folks that are attending. And we obviously want to keep your information private and secure at the same time too as well. So with that said, we can go ahead and begin. When we're starting here, we want to go over standards of conduct really quick. By attending this presentation, you are confirming that you are a registered attendee of this webinar, and the information that you are receiving today is only for your capacity as an NEA member or supporter. This presentation and its contents are confidential and may not be further distributed or passed on to any other person, published or reproduced in whole or in part by any medium in any form or any purpose. Audio and video recording, copying the slides, and the use of AI note-taking tools is prohibited without consent from us at the NEA. And of course, violation of these terms may result in legal action from us. But let's actually begin on the content then. So here's a quick agenda of what we'll cover today. We'll start off talking about public service loan forgiveness, PSLF for short. Just a quick refresher. Like I mentioned, we haven't had one of these webinars in a while. And so a lot of our members have gotten benefit from this program, but we, of course, want to help our members continue to get access to PSLF. So we want to make sure we go over the outlines, especially if there's anybody new and unfamiliar with it. Next, we'll go into talking about income-driven repayment plans, IDR, an update around that, especially there's been some litigation things that have been impacting IDR in general, and we can share updates about what you need to do around IDR, especially how it relates to PSLF. We'll also touch on the second Trump administration and what this administration has thus far accomplished and what they intend to do and how this will affect student loans writ large. And then that also includes changes at the U.S. Department of Education and what that looks like. Then we'll close out with a brief overview of the NEA Student Debt Navigator, which Lindsay will be going over, which Scott also mentioned about a very helpful tool to help our members get to the pathway of loan forgiveness or getting your loans forgiven. And then FAQs of questions that we frequently hear from our NEA members. And then finally, audience questions from y'all of anything that we may have missed that you were looking to ask. So again, we'll begin with refreshing y'all on public service loan forgiveness. So what is PSLF? This was a program that was first established in 2007 during the Bush administration. It was a bipartisan program created by Congress and statute. And the promise of PSLF was pretty simple. You work full-time for a public service employer for at least 10 years. And that is defined for the sake of our educators, that this includes all employers such as your public school districts and also public and nonprofit higher education institutions are considered eligible employers. The important distinction here is that your job title does not matter. That means teachers, ESPs, education support professionals, CISP, specialized instructional support personnel, and higher education faculty are all eligible for public service loan forgiveness. We continue to this day to hear some feedback that we have ESPs or SISs or other folks in education that don't think they're eligible for PSLF and thinking it's just a classroom teacher program, when in fact it just means you have to be working for a public school district or higher ed institutions. Thus, all four of the major sectors of the educator field are eligible for PSLF. And then the other requirement is making 120 on-time student loan payments. These months during the payment pause from the COVID-19 payment pause also do count for public service loan forgiveness. So how does PSLF actually end up working? So I'm sure most folks here know that up until about 3 years ago, the program actually was denying over 90% of applicants. And that was coming from a number of different loopholes and statutory issues that were creating barriers for a number of educators and other public sector workers from getting PSLF. However, since then, we've been really successful in helping over 1 million public sector workers to obtain PSLF. And this is equated in $78 billion in forgiveness as of December of last year. And to break out the field, we did see a great report from the Department of Education that broke out that 43% of that million are individuals that work in public education. 28% of those are folks coming from K-12, and 15% of those are coming from higher ed, many of those which are probably colleagues and union members of yours. And now I'm sure most folks are thinking this, especially with the change of the administration. And while it may feel uncertain about what the future is for PSLF, the current education secretary, Linda McMahon, has affirmed her legality of PSLF in her confirmation hearing when she went through the Senate, and reassured the members of the U.S. Senate that she would continue to oversee in the continued implementation of PSLF because it is required by statute and law. So again, who is eligible for PSLF? So again, we went over around the different educator sectors there. But the other caveats too is that you must have a federal direct loan. And if you have something called a FFEL loan or a Perkins or Parent Plus loans, those do not qualify for public service loan forgiveness. However, you can consolidate them into a direct consolidation loan, which would then make them eligible for forgiveness under PSLF. You also must be enrolled in an IDR or income-driven repayment plan. The 120 payments I mentioned earlier must come from an IDR plan. Otherwise, those payments do not count towards PSLF. You also must be currently employed full-time, which is defined as an average of 30 hours or more per week by your public service employer. And again, this includes all public school districts and public and nonprofit higher education institutions. And to cover how to apply for public service loan forgiveness, you will need to submit a PSLF certification and application form for each of your qualifying employers. So a really good example here is that, say you as an educator, you worked at one school district from 2015 to 2018, and then another from 2018 to your current capacity in 2025. You need to submit 2 forms because you have 2 different employment durations that are combined. And there are multiple ways about how you can apply for public service loan forgiveness. The first and conventional way is through the PSLF help tool, which is at that link there, studentaid.gov/PSLF. But what we actually recommend, especially to our NEA members that are joining us today, is you should use our Student Debt Navigator, which can be found at neamb.com/Savi. There's also a QR code just to the right over there. We'll leave that up for a few seconds after this so you guys can get that. But it's important to recognize that our NEA members, as a member of your union, you can get free personalized support from student debt experts from Savi by using the Navigator. And it is a much more simpler way to apply for public service loan forgiveness than to use the help tool. And we all recognize that while there's no one-size-fits-all situation about getting your best pathway to forgiveness, our friends at Savi and the Navigator can really help you figure that out. But we'll leave this QR code up for a few more seconds so folks can get to it. And thank you, Shayla, for putting it also in the chat as well. Now I will pass it over to my colleague, Jeff, who will go over SAVE and the different IDR plans and the updates around it. Jeff.
Yeah, thanks, Ronnie. As Ronnie mentioned, one of the requirements of the PSLF program is to make payments on your student loans under an income-driven repayment plan. I'm sorry to have to begin with the bad news, which is a review of the quick review of the SAVE plan, which was really a transformational IDR plan that the prior administration implemented that was much more affordable than other income-driven repayment plans, which all have their benefits, but the SAVE plan was going to hopefully provide relief for many people. In fact, it already had 7.5 million people quickly signed up for this plan once it took effect. But the plan was challenged by a group of attorney generals from red states who went into court in Missouri and asked the court to freeze the plan, arguing that the Secretary Cardona, prior Secretary of the Department of Education, was not authorized to implement this plan. And unfortunately, a conservative judge was assigned the case and agreed, put the plan on hold. The case went up to the Eighth Circuit, the U.S. Court of Appeals for the Eighth Circuit, which affirmed that decision, which permanently froze the program or effectively wiped it out. That's a decision that could be appealed to the Supreme Court, but the current administration has chosen not to do so. So this is really the death knell for the SAVE plan, unfortunately, which means it's no longer available. The court's decision was arguably a bit broader, unfortunately, and it leaves some uncertainty about the other IDR plans. Nevertheless, the administration, although they temporarily froze borrowers' ability to enter into other IDR plans, which left people in kind of this state of flux, both in terms of new borrowers who wanted to repay under an IDR plan, an income-driven repayment plan, as well as the 7.5 million folks who signed up for the SAVE plan. Fortunately, the department has now opened back up the other IDR plans. So they are now, as of this month, available. People can apply to participate in one of the existing IDR plans and to move from the SAVE plan into one of the IDR plans, which the importance of doing so is obviously that payments have to be made under an IDR plan to continue to gain qualifying months of credit towards PSLF. So particularly for those folks who are closer to forgiveness, being able to resume making payments under the somewhat affordable IDR plans that are now in existence, you now have the ability to do that and continue to work towards those 120 qualifying payments. So what happens if you were enrolled in SAVE? You have a few different options that really depend on your personal circumstances about which to choose to utilize. Those folks who were in the SAVE plan were put into a state of administrative forbearance where payments were not due while the litigation was working its way through. We understand that folks can remain in forbearance, but probably only until about September 2025. So if that's what you choose to do, you can remain in forbearance, but just know at some point you're going to be taken out of that administrative forbearance and you'll need to decide which of the existing or the remaining IDR plans is right for you. For folks who want to continue to make eligible payments, perhaps as I indicated earlier, because you're close to hitting that 120 payment mark, you can ask to be taken out of forbearance and placed into one of the remaining IDR plans, which are known as the income contingent repayment plan. I shouldn't do this because I can't remember the exact meaning of these acronyms, but I will tell you, although we don't have a link to it here, there still are very good materials on Federal Student Aid's website that predate this administration, frankly, that have been left up. And one of them gives specifics about the remaining IDR plans. In fact, they have left up information about the SAVE plan, and they have actually indicated that you can still apply to it. But then when you click the apply button, it takes you to a site saying you can't do that. So you won't be led astray. It's just it hasn't quite been updated. But I would encourage everyone, all you need to do is Google FSA IDR plans, and you'll find the plans with all the precise details of what they provide, and those payment terms are available. So out of these three options, remain in forbearance as long as possible if you'd like, apply to participate in another IDR plan, or consider participating in the PSLF buyback program, which I'll describe here. So what is the buyback program? This is really designed for folks who may have been placed in extended periods or may have moved into extended periods of forbearance or deferment earlier on in your career, and because you were in this forbearance or deferment status, you were not obtaining additional months of credit towards PSLF. So you may be close to PSLF and decide, I just want to be done with this. And if you have the financial resources to do so, you can essentially buy back those qualifying payments by making the payments that you otherwise would have made had you not been in forbearance or deferment. It's a fairly straightforward process. There's still a very good website on FSA. You can just Google FSA buyback program. It'll explain all the steps for you. But basically what you want to do is you want to do what I think of as some back of the napkin math. Go into your FSA account, figure out how close you are to forgiveness. And if you are close enough that if you buy back your previous months that you were in forbearance or deferment, that'll push you beyond the 120 payment requirement, then you can do so. In other words, you can't move from 100 payments to 110 payments to get a little closer to forgiveness. The buyback would have to push you over the finish line. And if you go into your FSA account, you can determine how many months you were in deferment or forbearance and calculate whether or not that would get you to 120. And here's an example that's on FSA's website that kind of spells this out. The green dots indicate the months that you made payments. The yellow is when you were in a qualifying deferment or forbearance period. And if you make those additional, I think that's 10 payments, you would get to 120 payments. So it's a way to cross that finish line as soon as possible, again, if you have the financial resources to do so. So what you'll do is you'll apply. It's through a process called reconsideration, which is kind of a weird way to phrase this, but you're basically submitting an application saying, I want to buy back my qualifying months. Within 90 days, you'll receive a response stating whether or not you are eligible. For example, you may receive a letter saying, actually, this would only get you to 119 payments, so you're not yet eligible for buyback. Or it'll tell you, yes, if you buy back your months you were in forbearance or deferment, you will get to 120 payments. And here is the agreement that we are offering you, FSA is offering to you, that would allow you to do so. And it will tell you exactly how much you would have to pay in order to buy back those months. And then you have 90 days to sign the agreement and make the payment, or choose not to if it's not something that's within your financial reach. And if you choose not to, it's no harm, no foul. It doesn't have any negative or deleterious effects on the credit you've already received or earned towards PSLF. So if you think you're close and you think you may be able to afford this, and this is an option for you just to get it across the finish line, I'd encourage you to take a look at that. If you think you're close enough that buying back would get you across that 120 payment threshold, you can submit the application. And again, all that will mean is you'll get an offer to buy back those months. You're not obligated to do so until you get that offer and can review the terms. So it may be a good option for some folks. And with that, I will pass things along to Sam.
Thank you so much, Jeff. So as we have seen, there have been a number of changes and proposals that have occurred that do touch on federal student aid and student loans since the beginning of this administration. So although the Department of Education cannot be closed without an act of Congress, we have seen an attempt to dismantle parts of it. Earlier this year, we saw about half of the staff that worked at federal student aid are no longer there. Some were buyouts, some were reductions in force, but the end result is about half of the people supporting the programs that deal with student loans and student aid are no longer there to provide support to ensure that things are running smoothly. We've also seen that Trump has stated his intention to move all student loan debt work to the Small Business Administration. Now, the student loan portfolio that is currently in federal student aid is $1.7 trillion. Small Business Administration has only handled things significantly smaller than that. And in addition, close to half of their staff has also been cut since the beginning of this year. So we see that as a real problem going forward, and one way that we really think that the keeping it in federal student aid and supporting borrowers is so important. We're also seeing, as of a few weeks ago, that the administration began formal rulemaking process. They announced the intent to commence negotiated rulemaking, which would be the regulatory process to change some of these regulations, specifically about public service loan forgiveness and IDR plans. Now, earlier this year, we also saw an executive order that was focused on the public service loan forgiveness program in terms of employer eligibility. Now, while the executive order itself didn't have much weight to it, this negotiated rulemaking process does actually allow those regulations to be affected. And so while it's not going to really focus on NEA employers that our members have, we do believe it would be illegal and subject to challenge. Second, in the notice, the intent to commence rulemaking, part of what will be discussed is specifically some of the other plans available. So it specifically mentions the income contingent repayment program, as well as the pay-as-you-earn program. So certain details of that, especially given what has happened to SAVE, likely will be addressed. Now, as we have done, we will continue to input your voice in this and closely monitor any changes that are going to affect our members and fight back against those illegal actions. And with that, I'm going to pass it over to a colleague at Savi, Lindsay.
Great. Thank you so much, Sam. And it's so great to be with all of you this evening. Again, my name is Lindsay Clark. I'm the Chief Borrower Advocate here at Savi. And I've had the pleasure of working with the NEA member benefits team and NEA team for several years now in providing you all with what we call the NEA Student Debt Navigator. You can access that by scanning the QR code. Don't worry, we'll be providing that later on as well. But we can go on to the next slide when you're ready. So before we dive in as to what this navigator can do and how it can help you to navigate all the things that you just heard about, first just want to briefly introduce you to who we are here at Savi, because I think it's important. So Savi is a social impact technology startup based in Washington, D.C., about a block away from NEA headquarters. And we were founded by student loan experts and advocates who have been fighting on behalf of the borrower for more than a decade. And in 2017, the year Savi was founded, this was the same year that borrowers could start applying for public service loan forgiveness. And some of you may remember this, but hundreds of thousands of borrowers applied and 99% were rejected for one technicality or another. And so we saw this happen and decided to do something about it. So we developed Savi as a technology platform and a human service to help borrowers like you and like me not only better understand our student loans, but to successfully navigate from start to finish around some of these really complicated government programs like public service loan forgiveness. But along the way, our goal is to make the experience of being a student loan borrower a better one. And we try to do that by identifying as much additional savings as possible on a month-to-month basis through things like income-driven repayment plans. At Savi, we like to think that borrowers and not their student loan debt are our top priority, which sets us apart in the fact that we really try to be the best advocate we can and work closely with the NEA teams to provide you with top service to ensure that you're going to get the best possible outcome. Which brings us to our next slide and why we're here tonight. We have teamed up with the NEA member benefits and NEA teams to power the Student Debt Navigator. And this is an exclusive student loan benefit made available to NEA members. We partner with some incredible organizations across the country to provide access to our services as an exclusive student loan benefit. So with this benefit, we're helping you with all things student loans, and you can access that Student Debt Navigator by visiting neamb.com/Savi, or you can scan that QR code. And in the next few slides, I'm just going to walk you through very briefly how the process works. We really try to simplify things as much as possible. Instead of having to fill out a bunch of different applications for these different programs, with Savi, you start one application, enter in your information, see your best options, and then we can enroll you in those programs from there. It's really as simple as that. So we can go on to the next slide. So this is just a look at your Savi account dashboard. It's sort of like mission control for everything and anything you could do in Savi, where you'll see any of your active applications, the status, any important information that you might need to know, like new policy updates and things like that. All of that can be accessed in one centralized place. When you're ready to get started with the process, it's fairly simple. I almost compare it to like a TurboTax, seeing as it's tax day, a TurboTax for your student loans. We're going to ask you some pretty basic questions around your family size, your tax filing status. On this next screen here, you'll see we're going to ask about income. Obviously, that's important in determining your eligibility for certain income-driven repayment plans. And then your employment. This one is really important in helping us determine your eligibility for certain forgiveness programs. We have a database of all of the public service loan forgiveness as well as teacher loan forgiveness eligible employers in the country. So when you start typing in your employer, you'll see it in that drop-down menu. We'll ask you some further clarifying questions. And I encourage you to enter not only your current employment, but any previous employment you might have had, seeing as these programs are retroactive. And then the last step in the process here is just linking your student loans. And you have a few options. You can either enter that information in manually, you can upload your student loan file, data file from studentaid.gov, or you can sync our loans, your loans with our student loan sync system. So we provide 3 different ways to make things as easy as possible. And then you're done. You reach the end here where we show you what your best options would be. So in this example, this is someone who is eligible for the pay plan, pay as you earn. That's a type of income-driven repayment plan. You could see what that new monthly payment amount would be, that total payment over time, so how much you would have paid by the very end, how long exactly until you'd be eligible for forgiveness, and how much in forgiveness you'd be eligible to receive. You'll be able to expand below for more details in comparison to other plans. Many borrowers are eligible for multiple income-driven repayment plans, so we show you all of your options right there. And the next part is making sure you take advantage of that Savi Essential or our premium service, which is free for your first year thanks to NEA member benefits. So you can select your plan at any point throughout the process or from your dashboard. And accessing this essential plan, again, for free for your first year, will give you a ton of different things. Not only will it support all of your application enrollment, so Savi will pre-fill, digitize, and submit all of your applications for you for income-driven repayment, public service loan forgiveness, teacher loan forgiveness, you name it. But you get access to one-on-one personalized support from student loan experts like myself via telephone, email, live chat. This is just a look at how you can make the most of that Savi Essential. On the left here, you can see someone who has 3 different employers that are public service loan forgiveness eligible. And literally with a click of a button, they can press Start ECF, and it's going to pre-fill and digitize that employment certification form they need to get sent to their employer and then submitted. And we do all of that for you from start to finish. So we send it to your employers. Even if you have 3, 4, dozens of employers, we manage that entire process and then submit on your behalf. And then on this next slide here, you'll see how we monitor and manage and track all of those applications in one place. So you can see, again, that same borrower with 3 different employment certification forms, as well as their income-driven repayment application, all tracked and monitored in one place. And then zoomed in here on the right, they can see exactly where they are in the process, what's been submitted on their behalf, estimated wait time from the servicer review. This also allows us to hold servicers accountable. If it's been 2 months and we've submitted an application and you haven't heard back, we're able to help you follow up with your servicer. And then last but not least, one of the new features I'm excited to talk about is being able to upload and safeguard your student data. Given all of the uncertainty and transitions that are going on right now with the Department of Education, one of the primary things that borrowers can do to safeguard their student loan information is by downloading and uploading into Savi that student loan data file. So there are a couple different types of forms that you can save securely within your Savi account, including your student loan data file, the master promissory note that you were given when you took out the loans, your qualifying payment count letter from public service loan forgiveness, and any other loan documentation, screenshots, things like that of your servicer account that you want to have safe kept. Hopefully you won't have to need them or use them in the future, but this is a secure way to store that, and all the directions and links to where to find that information are provided in that dashboard for you. And then last but not least here are customer support. You can access our customer support team at any point in time through your Savi account. There's a support button on every single page. We have an incredible help center with tons of great content. You can contact our support directly through your account. We have live chat available as well, and this is not AI, these are actual humans. And we have a telephone number that you can access. So any way that you need that support, we are here to help you. So to wrap things up again, you can scan that QR code or get started at neamb.com/Savi. Create your Savi account if you have not done so already, and take advantage of that Savi Essential Plan, which again is free for your first year, thanks to NEA member benefits, and complete any of those applications if you need to do so. And now I will turn it back over to the NEA team.
Hi, folks. So we're just going to get started by addressing some of the most frequent questions that we get working on student loan debt work with our members. So first and foremost is, how do I know how many payments I have made towards PSLF? It's a tricky question. So if you've applied for PSLF before, you can just log onto your studentaid.gov account and find out how many qualifying payments you have made right there on your dashboard. But if you haven't applied yet, you'll need to fill out an application. And so as Ronnie talked about earlier, that can be done either by going to studentaid.gov/PSLF or using NEA's member benefits tool with Savi, which you just heard a lot of wonderful things about. Next up would be kind of the golden question of, at what point should I be applying for PSLF? Can you retroactively apply as an educator who's been working for years? The answer is that, some public service workers like to apply each year to certify their employment and check on the progress of their payment count. And others apply only when they've, fully achieved PSLF at that 120 payment mark. Our recommendation would be submitting the application yearly so that you can confirm you're on the right track and make sure that, all your qualifying payments are adding up and that you're working for a qualified employer and that there's not going to be any snags later down the path. And it will also allow the federal student aid to alert you if any changes are necessary, rather than just waiting until all 120 payments have been made if there's something you should have been doing differently. And speaking of those 120 payments, we often get asked, do all 120 months of my qualifying public service employment have to be consecutive to count for PSLF? And the answer is no. As long as you work full-time for qualifying employers for a total of 120 months, you can be eligible for PSLF. So even if there was a few years in there where you were not working, you could still be eligible for PSLF so long as you have totaled 120 months. And so another question we get is, so now I've submitted my PSLF application. When am I going to hear something? That's a really good question. PSLF applications can take several weeks to months to process, but we are hoping that this process did get a little bit easier under the Biden administration. And we are hoping that progress continues, although as Sam touched on earlier, with reductions in force and things like that, we have yet to kind of amass enough data to see what their turnaround time is looking like. But if you have had, an unreasonable amount of time go by and you still haven't received a response from Ed, you can file a complaint with the Federal Student Aid Ombudsman, who can run a review of your situation and your student loan account. And that can be done right there at studentaid.gov/feedback-center. And another /. And then, as Ronnie mentioned earlier, we often get asked if ESPs are eligible for PSLF, and the answer is a resounding yes. PSLF is based on your employer, not your employee title. So all public school districts are eligible employers under PSLF. So ESPs at any level, pre-K through 12, would all be eligible for PSLF. Now to talk a little bit more about consolidation, I'll toss it back over to Ronnie.
Thanks, Chad. So this question that we see here is that I have never consolidated my loans. Do I need to do that now? And this is one that kind of depends, actually. So there's a few caveats here. Again, if you have Parent Plus loans, FFEL loans, or Perkins loans, you must consolidate your loans to be eligible for forgiveness because neither of those three types of loans are direct loans. And only federal direct loans qualify for forgiveness under PSLF. So you must consolidate those three types into a federal direct loan to go get that access. However, there might be some instances where keeping your loans separated may actually make the most sense, especially if you have multiple direct loans. When you consolidate multiple different types of direct loans, you will receive credit as a weighted average based on the qualifying payments of each of the different separate loans. So that total, that weighted average then becomes based on the number of payments you've made on each eligible direct loan and the amount of each loan, and you'll receive an average of that. And sometimes that weighted average could actually delay your progress of getting forgiveness, but will give you forgiveness all at once. So honestly, the best way to deal with of whether you should consolidate or not is to consult the NEA Student Debt Navigator, and a Savi representative in the tool will be your best and quickest, will figure out the best and quickest way for your pathway to getting PSLF. They will be able to determine whether you need to consolidate if you have any of the three loans I mentioned earlier, or if it's in your best interest to consolidate your direct loans, or if not, if you have multiple direct loans.
Thank you so much, Ronnie. I think I'm going to have Sam take care of the next one. So, Sam, my question for you: do Parent Plus loans qualify for PSLF?
Yes-ish. Yes, mostly. And I'll explain a little more about that. So the borrower, who in this case, even though it's for a student, the borrower is actually the parent. So the parent may consolidate them to qualify. However, the borrower with only Parent Plus loans may consolidate into a direct loan. If you have previous payments that you've made on Parent Plus loans, they will count for PSLF as long as they are applied for consideration in 2023 to have used the account adjustment. Now, a borrower that has their own direct loan and also a Parent Plus loan may consolidate those loans. So for this situation, the previous payments on the direct loans and the Parent Plus loans together will count for PSLF. Now, again, this is only if you've applied for consideration in 2023 to take advantage of the account adjustment.
Thank you so much, Sam.
And I will say on Parent Plus, I believe we also had a question on if you are a parent with children in college, if you wait until they graduate to consolidate the loans and start the PSLF process. I see one of my colleagues already responded, but I'll just reiterate. If you have Parent Plus loans that are in repayment, they technically can be consolidated while your student is still in school. But in general, payment does not begin until the full disbursement has been made. So before you consolidate, ensure that all of those disbursements have been made as you work towards forgiveness. Also recommend you reach out to Savi to weigh your options if that is a concern as well.
Thank you so much, Sam. This next question, Jeff, I'm turning back to you. So I have student loans from a private bank. Can those be forgiven through PSLF?
This is just a very simple no. Unfortunately, they cannot. They have to be federal loans. They have to be currently they'd be federal direct loans. So if you still have older loans under older federal programs, you can consolidate them into a direct loan to start the process of working towards PSLF. But unfortunately, private loans do not qualify, and you cannot consolidate them into a direct loan in order to be eligible for PSLF.
Thank you so much, Jeff. And Ronnie, I'll circle back to you for this last question. So can you tell me a little bit about what teacher loan forgiveness is and whether I can qualify for that?
Yeah, so teacher loan forgiveness, TLF for short. This is a program that's actually older than PSLF. It was created a few more decades previously. And TLF forgives between $5,000 and $17,500 of student debt for teachers who teach in Title I schools, special education, or high needs subject areas for 5 consecutive years. Caveat here, and there's a little mistake here that I actually just saw, is that it's for classroom teachers and not for educators. So there's a distinguishment that this isn't for education support professionals or specialized instructional support personnel, or those who work in higher education. This is specifically for classroom teachers in those criteria that I mentioned earlier. And those 5 years, though, is worth noting that count towards teacher loan forgiveness cannot be double counted for public service loan forgiveness. So if you have been previously a recipient of TLF, you cannot use those 5 years that you used as qualifying for that employer towards public service loan forgiveness. You should pretty much only consider teacher loan forgiveness if your entire loan amount will be forgiven under the parameters of the $5,000 to $17,000 that I mentioned earlier. Otherwise, public service loan forgiveness is more than likely the best option for majority of our members. But worst case scenario, definitely consult with Savi and the NEA Student Debt Navigator. The tool and our experts at Savi can help you figure out what is the best option for both TLF and PSLF. But generally, we steer folks towards public service loan forgiveness because that forgives the remaining balance of your debt when you get to the 120 payments on that loan, opposed to that finite amount that teacher loan forgiveness gets. And also given that TLF can also set you back in getting your progress towards public service loan forgiveness.
Thank you so much, Ronnie. And so now we will turn it over to some questions from you all that we've been getting throughout the course of this webinar, and some kind of common trends that we've been noticing. Jeff, do you have something you want to jump in with?
Yeah, I did. There's a good question. I mean, many good questions in the Q&A, and please keep them coming. But we have a question from Ashley, who asks or states that she's in her 11th year in public education, has been paying on loans the entire time, and has not yet applied for forgiveness. Am I eligible for forgiveness towards the payments I've already made? Or, yeah, eligible for the, well, yes. So the bottom line is yes, apply now. Certify the entire 11 years that you've been teaching. As Ronnie indicated earlier, kind of at the outset, if you've worked for multiple employers, make sure you get each of those employers to certify the time periods you work for them. If you made those payments under direct loans and on an income-driven repayment plan, it would be possible that you would be both eligible for forgiveness and possibly for a refund of additional amounts paid. Although that has always been kind of a trickier question. You should be eligible for forgiveness as long as you're making it under the income-driven repayment plan on direct loans. So those are really the two key components you would have to figure out. But if yes, in IDR plan and they're already in direct loans and don't need to be consolidated, you should be eligible for forgiveness immediately and may even be eligible for a small refund for payments made above 120.
Thank you very much, Jeff. Ronnie or Sam, do you have anything else from the chat that you want to kind of address to the group?
Yeah, there's one I saw that I wanted to answer live. This attendee asks, I pay yearly for a Savi account, and how can I change my status into repayment? I'm not currently repaying because I'm currently completing my PhD and I only have 1 more year to go. However, I want to take advantage that I'm also in a full-time position as a faculty member at a public nonprofit community college. I was on SAVE or an IDR plan and am trying to get PSLF. Should I contact Mohila or should I wait before starting to make a student loan payment? So I want to unpack a few things here because there's a few answers I can give you in this recommendation. First and foremost, so what you're in right now, because you're not making payments right now, is called in-school deferment. So anytime you return back to school, whether for a master's degree or for a PhD or doctoral program, your loans automatically go into in-school deferment. So you're not making payments. But you actually can opt out of in-school deferment. And that's because it's a great way to doing that, because especially if you are working full-time at the same time, especially for an eligible nonprofit employer or public sector work, you should opt out. And if you have the ability to make payments, then you can do that. So definitely contact your student loan servicer to opt out of the in-school deferment so that you can take advantage of that situation and continue making payments towards PSLF, especially on an IDR plan. Also worth mentioning too, Mohila also is not servicing public service loan forgiveness anymore. So anything that you're doing for PSLF is going directly to the U.S. Department of Education. However, Mohila is still a really good contact in terms of your repayment process. But just wanted to explain that caveat too, that it is no longer outsourced out to a student loan servicer processing those application forms. It's all being done in-house in the department now.
And I wanted to jump in with one other question. We had a question if taking absence for maternity leave or medical leave, if those months count towards 120 repayments. The short answer is as long as you are still employed by that employer, the time that you are on leave would still count as qualifying employment. Now, the key here is you would still need to make those payments even while you're on leave. But as long as you were still employed, that would count for time as having that qualified employment.
I'll take the next question here that was put in the Q&A, and it's asking, or it's stating that Mohila has informed this person that they need to recertify their IDR plan by September of 2026, which is new to me. As I indicated kind of earlier in the presentation, we had heard September of 2025, I believe. So I hadn't heard 2026. So this question is all about kind of personal choice. Should you recertify and start making payments to work towards PSLF, or should you remain in a period of forbearance? Now, it's possible the forbearance will end this September, but you don't have to recertify until 2026. So you may be forced into repayment before September 2026. And if I'm reading this wrong, Sam or Ronnie, just cut me off here. I'm trying to make sure I understand this. So again, it may be that you have to start making resume payments this in 2025, even if you don't have to recertify until 2026. Whether you should resume payments and start and continue working towards forgiveness and the 120 payment mark, or wait because you indicate here that your payments are going to be doubled under what you paid under the SAVE plan, which is what I alluded to earlier, is just so unfortunate, and I'm sorry to hear that. That's really a personal question about that involves both your current financial position, whether you can afford those payments, whether you're very close to forgiveness. It's possible that if you're, within striking distance, it may be worth it to, find a way to make those payments so you can get across the line and be done with your loans. But it's really going to be a personal decision. As Sam indicated, we feel somewhat confident as we can in this moment of great uncertainty that the PSL program will stick around and will ultimately be available for you to reach forbearance, in which case, if it's in your best interest to wait a year or until you're forced back into repayment to start working again towards forgiveness, that's really going to be a decision that you have to make based on your own financial circumstances.
Yeah, Jeff, that was really good. I think the only thing I really want to add to that is the reason why the recertification deadlines were moved to next year is because of the litigation piece. When everything was paused around IDR applications, the original recertification deadline was for February this year. But at that time, IDR plans weren't ready to be relaunched, which is why the delayed recertification deadline is going all the way to next year at this point. So that is why you probably received that letter. But as Jeff mentioned, everyone's scenarios are very different. And if you're in a position to begin making payments, then you are welcome to start doing that and opt into a new IDR plan because the forbearance does not count towards public service loan forgiveness. But however, if you cannot afford your payments right now, staying in forbearance might be in your best interest. But like I said, or like we said, best case scenario is just take a look at your own finances and also consult the Savi tool to seeing what options are out there available to you.
And because we have someone else who's jumping in to say that they were told their next recertification would also be fall 2026, and I must have forgotten that detail, so thanks for bringing that up, Ronnie. Just be aware that that still doesn't change the fact it's our understanding that you'll be asked to come out of forbearance and start making payments under some plan coming up later this year. So be on the lookout for notices about that. Don't misread this as being that you don't have to make payments until 2026.
I'll jump in, Ronnie and team. There was one question from a member asking about Savi's costs after the first year. And it is, again, we mentioned it is no cost for the first year for members. You get full access to the essential services, which includes, the recommendation, getting your help with consolidation, filing of paperwork. When it comes to the second year, if members do want to continue the service, many members do. It is $50 a year. So it's a relatively modest cost given that we think the hand-holding that Savi offers to members. So it's featured pretty clearly on the website. They actually even have another tier of service that if members would want to take advantage of, that can offer your help with some additional financial services if members were to want it. But we think that essential tool really gives members all the help they need with their student debt work. That's the tool the level that we recommend, and it's $50. So hopefully that answers the question.
Thanks, Scott.
Yep.
I want to take one here also as well. One person asked if I could actually apply for teacher loan forgiveness more than once. And you cannot, you can only receive teacher loan forgiveness once. However, if you are a recipient of teacher loan forgiveness, you can still obtain public service loan forgiveness. But again, the months used for teacher loan forgiveness cannot also double count for public service loan forgiveness. So that would be a total of 15 years of public service work for you to actually access both programs successfully.
All right, folks. If anyone has any additional questions, we are certainly, keeping the Q&A open. We are happy to do so. At the same time, we want to also remind everyone of our wonderful help tool through Savi. So I'm just going to toss that QR code up here again, but please don't take this as an ending to the Q&A. If you have questions, you can still send them.
There is one more question here asking whether Mohila is still servicing, I think it says student loans. They are servicing student loans, but the PSLF servicing of PSLF applications has been moved into FSA for now. Although we believe that they're going to be shifting servicing of student loans or the overall managing of the student debt portfolio of the federal government to the Small Business Administration, or such as the plan. This is the difference between generally servicing loans and servicing your PSLF application, at which point your loans will be moved to FSA.
I want to take this one also. I know Sam answered this behind the scenes for this individual, but one person asked if my student loans were actually forgiven under the Biden-Harris administration, which is a big congratulations to you. That's really awesome. I've received a letter indicating that I will receive a refund within 90 business days. So for folks unfamiliar, if you did receive forgiveness under the Biden-Harris administration, you might have been employed past 10 years and made overpayments. So that's why refunds are accessible, because you'd be getting a refund for any overpayments that you've made past those 10 years of certified employment. But the letter indicated that this person would receive a refund within 90 business days. Presently, they have not received that refund. Do you think this administration will block their refund? First and foremost, nothing right now so far indicates that this administration is intending to do that. As I mentioned earlier, Linda McMahon, the current education secretary, has reinforced that under her purview, she will continue to enact and oversee the public service loan forgiveness program, because it is required by law and is within statute for the department to continue this program functioning. And that includes refunds also as well. But our recommendation would be to help expedite that process. If you still have not received that refund, especially within that 90 business days that they presented, definitely contact the Federal Student Aid Ombudsman. You can file a complaint there, and they will individually review your case and help expedite that process and give you an answer. If needed, also, you can also use NEA student debt resources and use the Savi tool also as well. And we'll put a link to make sure that you have access to the ombudsman also as well. To my NEA colleagues, is there any ones that you guys wanted to share with the full group?
There's a new question that just popped in. Can someone choose the amount of months to buy back? No, you can't. What will happen is, if you're eligible for buyback, if you're close enough to forgiveness that buyback will allow you to hit that 120-month threshold, then you'll be offered an agreement that you will sign and send back along with payment to reach 120 months. So you can't bring, going back to that kind of like graphic we had up earlier, you can't choose to say, well, I'm at 110, I'm going to buy back 5 payments and make 5 more payments. They will make a kind of a one-time offer of where you're at that point in time. So if you still owe 10 payments, you would have to make those 10 payments in a lump sum within 90 days. Actually, interestingly, you don't have to make it in a lump sum. You can make several payments over the course of those 90 days. But within 90 days, you have to pay that total amount to bring you to 120. So if you're in a position where you can't quite afford the full amount that would get you to 120, then the strategy would have to be, say you can afford 5 months, but you need 10 months. Well, make 5 months of payments over the next couple of months, and then once you're closer, then you would apply for buyback, and you would pay off the remaining 5 months to get to 120.
Thank you, Jeff. Does anyone else up here have any questions that they got in the chat or that they've heard during this webinar that they want to discuss with the broader group? All right, well, as we wait, just want to tell folks a reminder, the QR code on the screen will bring you directly to that link. That was, I believe, also just dropped in the chat for you. But if you want to use your phone, you can just scan that QR code right there, and that will bring you to the Savi Student Debt Navigator, which is pretty darn nifty, if I do say so myself.
And Shayla, when you get the chance, could you throw some of the other NEA links also in the chat? I want to make sure folks get access to that stuff too. I know it's a little early, but seeing that it's quiet, I want to make sure folks have it. Well, seeing nothing else is coming in and we're just a little shy of 8 o'clock, we'll conclude this webinar. But thank you so much again, everybody, for joining us this evening. If there were any unanswered questions or any further questions you guys had, we'll try to answer them offline. But otherwise, like I mentioned, the webinar was recorded this evening, so we'll be sure to distribute a recording link out to y'all and all registrants of the webinar in the next few days, as well as a PDF copy of all the slides. But thank you so much again, especially to our educators out there and our NEA members out there. We really appreciate everything you do on behalf of our students. And so we wish you the best and take care, and know that NEA and our member benefits team and Savi are here to support you on your student loan forgiveness progress. But take care and hope everyone has a good evening.
Thanks, everyone.